Good morning and good evening, everyone, and welcome to Refinitiv Perspectives Live. 2020 has been a year of change, and the pandemic crisis has been a key accelerator in the decisions companies have made in order to remain operational. In the advent of the virtual office environment, digital adoption and also transformation has been the top priority for firms. Joining us today to speak through this accelerated shift is April Rudin, founder and CEO at the Rudin Group, and also Christopher Sparke, Global Head and Digital Solution for Wealth Management at Refinitiv. Welcome, April, and welcome, Christopher.
Thank you.
Hi.
Thank you for joining us, and thanks for taking the time.
No problem.
Happy to be here.
Let's start with the last sentence that I just rolled in, probably, because in the wealth industry, there have been a lot of changes, a lot of digital transformation for a while now, obviously. But how and why do you think the global pandemic has accelerated this transformation?
So I would say the one of the silver linings, maybe one of the few silver linings of the pandemic has been the push to digital, and particularly for wealth management. I read a few months ago that PwC called wealth management one of the least digital industries, and so the pandemic has really forced people into becoming digital. It's taken the 5 years and compressed it to 5 months, where we've had a stress test like no other, where people have had to go to work from home, and they've had to enable their business continuity plans. And for the most part, it's been really smooth and really great. And I think it's been perhaps surprising, I don't know what Christopher would say, but perhaps surprising to some people in wealth management how smooth and easy it's been in terms of transformation to digital.
Yeah, I mean, from our side, we've definitely seen that the ability for customers and then their advisors to shift to a digital model has definitely accelerated. So I think at the beginning there was a lot of concern around how do I access my customers and how do I maintain business continuity. I think what the pandemic has done is at the same time it's put everyone in the same boat. So it's not like a portion of our society went into a working from home environment and everyone else didn't. I mean, outside of critical medical care staff, everyone had to work from home. So it kind of forced that engagement model and that contingency planning to happen at the same time. And so once everyone got used to that, I think that, yeah, there's been probably a surprise overall around the acceptability of digital working. I think the other thing is that, candidly, a lot of the tools have been available, but we haven't necessarily used them because of the face-to-face option. So just sharing with you openly, at Refinitiv, we had been using Microsoft Teams for some time, as a digital tool, but we didn't use it to the extent of its capacity as necessary because we weren't forced to. The pandemic changed that. And so then you had to utilize those services more. I think that's probably the same when you think about wealth management and how customers have online tools that then, they clearly need to be improved, but they are there and customers have to utilize those. So certainly we've seen, our customers shift to adopting to a digital format. And our view right now is that that's probably going to continue for some time, right the way through next year, probably at least halfway through, and then we'll see what a vaccine and everything else does to that in the second half of next year.
Do you feel that
sorry, I was just going to add, I think there's been a lot of risk and not so much on the reward side, Christopher. And so I think all of that went away, right? And people it's an even playing field, and people have gotten the rewards, right? The risk has been removed out of necessity.
Absolutely. I mean, when we get to some of the online areas, there's clearly certain things that I think we've seen an acceleration on. But yeah, at that level of being able to work remotely and continue business, operationally, certainly from a wealth management perspective, that's probably been more robust than one would have thought if prior to the pandemic you had done a poll and said what would happen if this happens, right? So I think that, yeah, there's no doubt of that.
Do you see more that the clients are coming up to Refinitiv, or in your case, April, to the Rudin group, saying we need more BAB logins, or what are their needs, or what were their needs in March in comparison maybe to the now?
So I would say from our standpoint, running a global marketing firm, there's been a huge increase in terms of client communications and the move really toward hyper-personalization. All of these capabilities, to Christopher's point, have been there. It's like it's always been there, but now it's enabled, and advisors are now finding themselves in the position of having access to information, to data, to systems that allow them to provide really customized and hyper-personalized service to their clients. So I think it's the real benefit has been also that advisors have been able to get closer to their clients, right? Once the mahogany table has sort of been removed and we're all face-to-face, we're all work from home. And there's more of an authentic and transparent connection just between people.
Well, we would have thought differently probably in the beginning, taking so much, or putting so much distance in that whole setup. And then you're saying that people are actually getting a bit more closer, or at least from the advisory perspective, it's getting more personalized.
Yes.
Sorry, Chris, you wanted to add something to that?
Yeah, no, I just really agreeing with April. I think COVID is an accelerator rather than a changer. There's been a digital shift in wealth management that's been documented by various consultancy firms for at least the last 5 years around digital innovation, data management, all of these things. And that's been in response to regulation and fee compression and all of those things. So I don't think digitization, right, I don't think there's anything new as a result of COVID with the digitization. It's driving the point. And whereas maybe firms were assessing their options, COVID has forced them to engage those options. So it's just accelerated a trend that I think has been in place for the last few years anyway.
Yeah, I mean, you both have mentioned now the ever increasing need also for advanced technology, obviously, that it is just as important as the need for more robust data also for the wealth advisor, as you also mentioned, April. Like coupled with this ever increasing need for more advanced technology, just as important is the need now for robust data as in this personalized and relationship. Why is robust data so important, especially now?
Well, I think that advisors have found, as I was saying, a newfound sort of closeness with their clients, and people's priorities have changed. Let's face it, not only have we had an economic crisis, but a health crisis, and we've all really been in it together. And it's given end investors a time to really reconsider what are their priorities in terms of their investments. So do they want to invest more in ESG? Are they thinking more about the environment? Are they thinking about biotech, healthcare? What types of investments are they thinking about? And more than that, I think it's really brought to life the whole idea of holistic financial planning finally. Like, what is the role of the advisor? And I feel like that has forever changed. We have, which might be the word of the year, the essential worker. And I feel like wealth managers have now made themselves, have now made it to the point of being an essential worker, because their end clients are relying on them for all sorts of information that is even beyond financial advice. So I feel like there's a real partnership now between clients and their advisors, and data can help enable that, providing background and analytics.
Yeah, probably partnership is the right word in that setting also, because it's becoming more a work of and an exchange of information on both sides, and not just from the part of the advisor himself. So people are demanding
a hierarchy, like an advisor talking down to a client. And now it's, I don't know what you say, Chris, we're more of a partnership between advisors.
Yeah, because the needs and the demands are different ones now. And also probably it has a lot to do also with the generation that is interested in investing in general. We see a lot of change also in that. Probably Christopher can also add to the change of interest from a client's perspective.
Yeah, I mean, look, a few things just been covered there by April, all of which I agree with. If we just start with data and differentiated data, and we discussed ESG. I mean, there's two things happening here. The first is the online drive and the move towards digital as a result of COVID clearly has allowed people to have more context, more control, more visibility into their portfolios, etc. As well as it's driven demand for a greater level of curiosity because they are accessing it more online. So if there's an ESG interest and people are looking online, there's just going to be a natural desire to get a better understanding about what the ESG scores and metrics are of a portfolio or your investments that you have. And that therefore is an opportunity also for wealth firms to think about how they take advantage of differentiating that online experience by providing that sort of data that aligns to their clients' interests. So kind of COVID moving online equals data to be relevant. And then I think the second point is during COVID, given it's obviously ultimately it's a pandemic which has taken significant numbers of lives, there is a much greater focus, I think, around investors about the general well-being of society. And so things like ESG and connecting that to society and its importance has led to a bigger focus, not just on the total return of the portfolio, but fundamentally its contribution to well-being. So I just think again, these points have just driven some of that focus around it. Certainly at Refinitiv, there's been almost every wealth client we've done our sort of virtual check-ins and strategy updates with. All of them are asking us about our ESG data. Every single one. I mean, there's a focus around that. So every firm is trying to think A, how it responds to its clients, and B, how it actually is able to align, as April was saying, the online service to the client's demands around areas of interest that are important to their clients.
Yeah, it's more about ethical decision making, as you mentioned. It's there's a shift going on in a different kind of direction than it was before.
That's telling us about the great family meetings that they've had. And that they haven't been able to have before because people are working from home or they're at home and they're taking the time, they're all available for these great family meetings and that they've never had before. And so that's been a really wonderful outcome. And as Christopher said, it impacts humanity and society in general. So it's not just families, but it's, greater work.
Yeah, I mean, just to almost put a kind of stat around this, we have a mutual fund business, a business which is just collecting mutual fund data. And therefore, we have research teams that measure the fund flows on a quarterly basis. Just to give you an idea, we saw in Q1 about $36 billion increase in AUM inflows into ESG-related mutual funds. So, I mean, outside of the interest, the numbers are just showing that, the flows into ESG-related funds is growing at a significant rate.
And it was also to keep it towards you now, Christopher, it was recently announced that Refinitiv has partnered with UBS. What is Refinitiv doing to help UBS and other wealth firms in general, obviously? Also, how is Refinitiv helping in this space? Because everyone knows UBS, everyone knows there's a big wealth part of it. What is Refinitiv exactly doing there?
Sure. Now, we provide essentially the insight and information platform to enable the UBS advisors to do their job. I think the key driver there is wealth firms more broadly are looking to integrate what is a fairly disparate set of services that an advisor needs to do their job. So we did a research report a couple of years back, that showed that the average advisor uses about 7 to 9 different applications to do their job, between the CRM, the construction tool, the information platform, et cetera, et cetera. So what we really provided to UBS and what we provide to all our clients now as a part of our capabilities is simply a service that doesn't just provision information on a fixed desktop, but it's essentially interoperable with whatever environment, with whatever setup the customer has. So it's really allowing digital interoperability and digital integration of services that kind of came together in one cohesive workflow. And that platform wasn't actually ours, that was UBS's and their partners, but we simply accommodated and allowed our services to integrate in a technologically advanced way. And that if you just sort of take that back and think about digital innovation, I mean, that's where data and technology is playing the role in allowing outcomes through integration that allow an advisor to be more bespoke, to be more efficient, to be more time focused on their clients, because the workflow and services are integrated. They're not having to manage many different things with different backends, etc. So just trying to give you a bit of a theme about what we've done with technology. And really, UBS is simply a customer that's went with us on some of the releases. But this is what all customers are striving for, which is how can I make my advisor's job less about analyzing the source and trying to bring these things together, which then results in a lot of time focused on internal procedures. How do we take that noise away so they can focus all the time on their client and focus on what's the difference for the client?
And you can imagine, I mean, work from home is a little bit messy and a little bit crazy for everyone, but being a financial advisor could be even more so given the volatile markets, the anxious clients, and all of that. I often think, I don't know what you have to say about this, Christopher, but it's interesting because all of these sort of back office functions have now become so much more important. They've made it all to the front office. So how your digital transformation works, where your data is coming, where your data flow, what is your workflow is now made it to the front office because it's made the job easier for advisors. And that, I think, has been a big acceleration with COVID.
Yeah.
I mean, yeah, when we're talking about those bigger firms like UBS, but was there a clear, let's say, digital strategy behind that, or was it a different first approach? Did it change now because I believe deals like that don't just happen overnight. So did something change during the whole process of implementing Refinitiv Workspace, or did they come with a different idea in?
No, I think that, like most wealth customers, there's been a very focused approach on starting at the top. How do they make their advisors' lives easier? How do they utilize technology to make their advisors more effective, more productive, more client-centric, better engaged, etc. And once that strategy has been evolved, it's how do you then execute that? So I don't think COVID changed that. I think what it did do was just drive the need for the acceleration of that, so that it could be implemented as soon as possible in a working from home and as April said, a working from home environment. But I think all these trends around how advisors can better engage with their clients again does come back to how do I build a holistic plan that feels and is relevant to my personal goals, and that again is all around utilizing technology and information that combines really what is all of the information that you have on your customer to all of the products and the relevant information that you have on markets to construct that. So a long-winded answer, but no, I don't think COVID in itself was a change in that. But I think like most firms, ultimately enabling the advisor to be more efficient, more effective, more bespoke, more engaged is what the goal is about, and it's how you use technology to achieve that.
Yeah, and April, you mentioned just before the roles. I mean, back office, front office. Those roles that have come from the back office to the front office, do you see them remaining there, or how do you see them adapting for a return to the office environment?
So what I meant was the functions, the workflow of back office and data being, sort of back office functions. I think that, we've come so far. I don't think that we'll be returning back to the office, or that things will return back to where they were. I think that people have adapted and adopted all of these new tools, as Christopher was saying, and it's all been to the benefit, surprisingly or not, the benefit of the wealth firms and also their clients. So I think there's real opportunity now for differentiation I think Christopher mentioned that. I mean, firms and brands now have the opportunity to build on whatever their digital transformation plans are, and build on their abilities to provide more hyper-personalized and customized wealth advice and wealth planning, and even beyond that, because to their clients, because I do feel that, again, not to repeat myself, but I just think it's so important, is the wealth manager is now an essential worker. And so people are relying on that essential worker, and that will drive the need for even probably quicker acceleration than what we've seen now.
I mean, when we're talking about firms like UBS, if we put the big ones, let's say, aside, also looking at smaller or even medium-sized firms, how have they continued to work through the crisis? Do we have? I mean, can you say something to that? I mean, because obviously there are smaller and even medium-sized firms that have problems during the pandemic or have big advantages during these times?
I mean, let me take that. I think that being mindful of how different firms operate, I think in some ways a smaller firm doesn't have some of the scale challenges with technology that larger firms have. So I think in technology today, if you think about it, you could probably today digitally set up a business in 48 hours and have an email account, an office account, some cloud space to store information securely. So if you just think the access to being able to run a business now in a digital world is probably means that the access to do that from a small business is probably better than it's ever been. Clearly, the different business models, the dependency on small wealth businesses on their custodian and the service that they offer is one that's important, and how they get access to all of that information is key. Therefore, I think what you see is the smaller or wealth firms have a greater need to try and have a service out of the box. If you think about asset management, in the asset management space, a hedge fund is looking to outsource almost all processes other than simply the investment side, whereas a large institutional asset management firm has a much bigger set of operations and groups to manage. So similar in wealth, if you're an RIA, you're looking to try and get as much of that service off the shelf that allows you just to focus on the client. So I think from our side, we do see from the smaller businesses, curiosity in terms of, are there off-the-shelf services that they can quickly and easily implement that don't require heavy operations, that don't require significant investment of time? So, when we talk about technology innovation, it's also how can I take some technology from a firm like Refinitiv or whoever and implement it easily? I don't need to have a IT department of 20 people to go and integrate that, because we don't have that scale, right? So I think that there's an ease of access to technology that is there, but I think at the same time, there's also a driver for a more sort of how holistically can you provide me a service off the shelf? There's a very big driver for that as well.
I mean, you're already pushing a bit into the future. Sorry, April, you go first.
I was just going to add something onto that, because I completely agree with Christopher. And I think what it also brings up is the fact that digital transformation can be an equalizer, a great equalizer between small firms and large firms. It's the David and Goliath sort of goes away, because they are able to get an off-the-shelf program and platforms, and so they are able to deliver the same kind of service at different sizes. So I think that's where you'll see an acceleration of RIAs, because that can continue to help them to provide better or equal service to some of the larger firms, which could never have happened before.
I wanted to also ask and to summarize more or less, because you've already put a couple of wordings into how it will move forward. So the question will more be how you see it evolving or developing in the future. I mean, do you see this whole change as a sign that firms are looking to enhance their offerings, or maybe concentrate on a more niche segment, let's say? to keep up with digital transformation and to have a look, in the future, how it could evolve? What are your opinions on how it will look like in the near or even long term?
I can go first. I mean, I think that firms are going to look to try and utilize all of the intelligence they can that they have at their disposal. I mean, if I look at it another way, I think firms realize that they are sitting on a potential huge asset base of information, and they're not utilizing it today. They're not being able to take advantage of that information to help provide better services. So, I think if you're asking me kind of high level, what sort of themes do I see in the future? I think you're going to see a much greater use of artificial intelligence and unstructured data to try and use all of the information that you currently have to enhance the offering that you provide to your customers. I think we'll probably see a continued trend towards both an advisory model, but also an accelerated self-directed model. I think that we will continue to see, especially with the millennials, service providers trying to capture the mass affluent market better with more holistic wealth investment platforms that allow an end user to build everything themselves. I think that those would probably be some of the two big areas, and then I think we'll see from the larger institutions just a continued focus on technology, not just to support what would be improved engagement and improved service, but I think clearly technology is also something that can help control cost. Whilst there's the initial outlay on technology, I think there's also the potential to try and drive down some of the manual costs that is in place today that is being a challenge. So those are probably the three things. I mean, April, it'd be good to get what you see. I'm biased, obviously, but what do you think?
I would agree with you. I think initially digital transformation or digital technology was really thought of to reduce operational costs. But now I think people have realized that technology is a real revenue generator and can be an accelerant. And I think from and pushing up against that, you have disparate client wants and needs. There is no one size fits all. People don't want this or this. So there's an over segmentation, I think, like millennials just want self-directed, which isn't true. Study after study disproves that. Or as we were talking before the show, Christopher, some of the highest digital demands are from ultra high net worth baby boomers, right? The people that you're least expecting it. So I think firms will have to offer multiple entry points, and that will be the way that they differentiate themselves and attract more clients with hyper personalized offerings, more than just off the shelf sort of solutions. So I would say that the future really looks bright and rosy for wealth management, as being really digitally transforming from here on forward. And the real benefit and the real winners here will be the end investors.
Yeah, I agree. I think the only other thing I would add actually is, I think areas like cloud and cloud-based technology and the analytic that and cloud can provide. I think if you think about where cloud was 5 years ago, certainly public cloud and its acceptance or lack of acceptance, I think you're going to see a change in dynamic there, and that will continue. No doubt, the output that cloud enables will drive the goal of ensuring that it can be utilized in a compliant and regulatory standard way. So again, that would be the only other thing I would add over and above what we said.
Yep. I agree.
Thank you very much. We've came more or less to an end. I don't want to extend it too much. Thanks for your input and also for your time, April, and also Christopher, of course. Thanks very much for everyone else for listening. And if you like to learn more, you can download the report, The Transformation of Wealth Management, 5 Trends for 2020 and Beyond, by following the link or scan the QR code that is shown right here. I'm hoping to see you soon and have a great evening.